What's up, crypto crew, and welcome back to Bitcoin Bulletin. Kicking things off with a bang, we're seeing an explosive global race to adopt Bitcoin. Reports are flooding in that a staggering 27 countries are actively exploring or implementing Bitcoin exposure, and an additional 13 nations are already drafting legislation to get in on the action. This isn't just a trend. It's a full-blown macroeconomic shift as governments worldwide recognize the power of decentralized digital assets. Next up, we're diving deep into Bitcoin's price action, and the numbers are wild. We're talking about Bitcoin's supply and loss doubling as the price dipped below that critical $112,000 mark. This dramatic shift highlights just how quickly market sentiment can flip and how sensitive even the most established cryptocurrencies are to price fluctuations, especially when they're hovering near all-time highs. What does this mean for your holdings? And then, hold on to your hats because Saylor, the undisputed titan of MicroStrategy, has dropped a bombshell. He's boldly proclaimed that Bitcoin is the one true form of money, dismissing all fiat currencies as mere credit instruments. This isn't just a statement, it's a philosophical challenge to the entire global financial system. We're breaking down Saylor's radical vision, exploring the implications for traditional finance, and dissecting the future of payroll in this crypto-dominated era. Finally, while Bitcoin navigates its choppy waters, one altcoin is absolutely on fire. We're seeing BNB, Binance's native token, absolutely crushing it in the market, defying the broader crypto downturn. What's fueling this incredible surge, and can it last? We've got all the analysis you need to understand this market divergence. So, if you're ready for the full scoop, make sure you're subscribed and have that notification bell on. Let's go. Global adoption race heats up. Get ready, because the world is officially embracing Bitcoin. A groundbreaking report from the Bitcoin Policy Institute reveals an astonishing level of active Bitcoin exposure across 27 countries. But it doesn't stop there. An additional 13 nations have already put forth proposed legislation, signaling a clear intent to integrate Bitcoin into their national economic strategies. This isn't just about a few forward-thinking nations anymore. It's a global movement, a macroeconomic shift driven by the undeniable power and potential of decentralized digital assets. The race is on, and countries are scrambling to ramp up their Bitcoin adoption. This surge in global interest means Bitcoin is no longer just a niche digital currency. It's being recognized as a significant macroeconomic asset, influencing national policies and investment strategies worldwide. The implications for financial sovereignty and the future of global finance are immense, as more countries look to diversify their reserves and offer citizens alternative financial tools. The community is buzzing with excitement, with analysts pointing to this widespread governmental interest as a major catalyst for future price appreciation and mainstream acceptance. Discussions are rampant about which countries will lead the pack and what this means for the global financial order. Will this be the dawn of a new era for digital currencies on the world stage? But what happens when the market takes a sudden turn? You won't want to miss our next segment on Bitcoin's surprising price movements. And later, Saylor makes a jaw-dropping claim about Bitcoin's true nature. Bitcoin supply and loss doubles as price dips. Prepare for a shocker in the Bitcoin market. In a dramatic turn of events, Bitcoin's supply and loss has officially doubled as the price tumbled below the critical $112,000 mark. This sharp 3% decline serves as a stark reminder of how quickly underwater supply can expand, especially when prices are flirting with all-time highs. This metric, supply and loss, refers to the amount of Bitcoin held by investors at a price higher than the current market value. When this number doubles, it signifies a substantial increase in the number of investors who are currently holding onto assets that are worth less than what they paid for them. This can often lead to increased selling pressure as investors look to cut their losses or simply exit the market. The rapid expansion of supply and loss, especially near record highs, indicates a fragile market sentiment. It suggests that many investors who bought in at peak prices are now underwater, potentially creating a wave of panic selling. This can exacerbate downward price movements, turning a minor dip into a more significant correction. Traders and analysts are closely watching this development, with many expressing concern over the potential for further downside. The doubling of supply and loss is a red flag, signaling that the market may be more sensitive to negative news or broader economic factors than previously thought. The community is debating whether this is a temporary blip or the start of a more prolonged downturn. But the market isn't just about price dips. It's also about bold declarations that could redefine everything. Next, we're diving into Michael Saylor's explosive claim: is Bitcoin the only true money? Michael Saylor, Bitcoin is the one true form of money. Get ready for a financial philosophy bombshell. Michael Saylor, the visionary behind MicroStrategy, has boldly declared that Bitcoin is not just an asset, but the one true form of money, while relegating all fiat currencies to mere credit instruments. This seismic statement challenges the very foundation of our global financial system and ignites a crucial debate about the future of currency itself. Saylor's argument centers on Bitcoin's inherent properties: its decentralized nature, verifiable scarcity with a hard cap of 21 million coins, and its resistance to inflation. He posits that unlike fiat currencies, which are susceptible to government manipulation, printing, and devaluation through debt-based systems, Bitcoin represents a pure, incorruptible store of value. This perspective resonates deeply with crypto advocates who have long championed Bitcoin as a hedge against economic instability, inflation, and the erosion of purchasing power inherent in traditional monetary policies. However, the path to Bitcoin as the sole form of money is fraught with challenges. Its notorious volatility remains a significant hurdle. Daily price swings can make it impractical for everyday transactions and long-term savings compared to the relative stability of major fiat currencies. Furthermore, Bitcoin's deflationary nature, while a strength for store-of-value proponents, could theoretically stifle economic activity by discouraging spending. Fiat currencies, with their adaptability and ability to be managed by central banks to stimulate growth, offer a flexibility that Bitcoin currently lacks. Despite these challenges, the integration of Bitcoin into financial systems is accelerating. We're seeing innovative approaches to payroll, with companies exploring hybrid models that blend Bitcoin payments with traditional fiat to mitigate volatility risks for employees. Stablecoins are also emerging as a bridge, allowing for consistent value transfer while leveraging the efficiency of blockchain technology. These advancements, coupled with a growing acceptance among tech startups and even traditional institutions, suggest a future where Bitcoin plays a far more prominent role, even if it doesn't entirely replace fiat. Traditional banking institutions, while often cautious, are increasingly acknowledging Bitcoin's disruptive potential. Giants like BlackRock are not only launching Bitcoin ETFs, but also making direct investments, signaling a pragmatic shift from outright skepticism to active participation. This evolving landscape suggests that banks may transform into facilitators of a hybrid financial ecosystem, offering crypto custody and risk management services rather than solely acting as intermediaries for fiat transactions. Navigating the regulatory maze remains a critical factor. Regions like the EU, with its MiCA framework, and Asia, with evolving licensing regimes, are establishing clearer rules for crypto assets. Companies must invest heavily in compliance, understanding AML, KYC, and varying tax implications across jurisdictions. This regulatory clarity, while complex, is essential for fostering broader adoption and building trust. Michael Saylor's bold assertion forces us to confront fundamental questions about value, trust, and the future of money. While Bitcoin's volatility and regulatory hurdles mean it won't replace fiat currencies overnight, its unique properties position it as a powerful alternative and a potential cornerstone of a future, more decentralized financial world, where both Bitcoin and fiat currencies coexist, each serving distinct but vital roles. But what happens when the crypto market faces a major shakeup? We've got the details on how other coins are performing. And stick around as we break down why BNB is absolutely soaring while Bitcoin struggles. BNB soars while Bitcoin stumbles, the market divergence explained. In a crypto market reeling from a massive liquidation cascade, a surprising trend is emerging. While Bitcoin is facing headwinds, Binance's native token, BNB, is absolutely on fire. This divergence offers a fascinating glimpse into market dynamics and the factors driving altcoin outperformance. The broader crypto market is still feeling the effects of yesterday's $1.7 billion liquidation event, with total market capitalization seeing a slight dip. Meanwhile, traditional markets like the S&P 500 are hitting new highs, and gold is surging, indicating a flight to safety and risk appetite elsewhere. This contrast highlights the unique pressures currently affecting digital assets. Bitcoin itself is struggling, slipping below $112,000 and showing signs of weakening trend strength according to technical indicators like the ADX and RSI. Market sentiment, as reflected on prediction markets, is divided, with bulls losing confidence in a swift recovery. The technical picture suggests a potential for a sustained correction in the short term, making it a challenging environment for Bitcoin investors. However, BNB is proving to be the exception, shining brightly as the best-performing crypto in the top 10 over the past week. Its surge is largely attributed to the booming success of Aster, a decentralized perpetual futures exchange built on the BNB Chain. As BNB is the native gas token for the network, increased usage directly translates to higher demand for BNB itself. Aster's rapid rise, even challenging established DEXs like Hyperliquid, is directly fueling BNB's upward momentum. Technically, BNB displays a decisively bullish picture. Its ADX indicates a strong trend, the RSI sits in a healthy range for continued gains, and its short-term EMAs are well above long-term ones, signaling strong bullish momentum. This strength is particularly noteworthy given the prevailing negative sentiment in the wider crypto market, demonstrating BNB's ability to swim against the current. Community discussions are buzzing about BNB's resilience and the potential for further gains, especially as the BNB Chain ecosystem continues to expand and attract innovative projects like Aster. This performance offers a beacon of optimism for investors looking for strong performers amidst market volatility. So, what's the big takeaway from all this market action? We'll wrap it all up with a lightning round recap and your essential calls to action. And that's a wrap on today's Bitcoin Bulletin. We saw a global race to ramp up Bitcoin adoption with 27 countries actively exploring it. Bitcoin's supply and loss doubled as prices dipped below 112K, showing market sensitivity. Michael Saylor declared Bitcoin the one true form of money, challenging the financial world. And while Bitcoin struggled, BNB absolutely soared thanks to the success of the BNB Chain ecosystem. Don't miss out on any of the action. Smash that like button if you found this valuable, subscribe for daily crypto insights, and ring that notification bell so you're always the first to know. Share your thoughts in the comments below and follow us on all social platforms for more exclusive content. We'll see you in the next one.